This video is brought to you by Blue Guardian, the prop firm that lets you trade with EAs or any style you like at any time.
Again, the counter trend, low, high, low, high. That's our last buying volume with that supply. We failed to generate that lower low. We ended up making the higher high, breaking the structure. I was hoping to get that pullback into that demand to go long, but of course we ended up just continuing to trickle over and over again. What's going on, fellow traders? Hope you guys are doing really well today. It's your boy Nate from Aerial Effects coming at you with another pre-market analysis video. I do have a ton to talk about today, but I'm going to cover three really important pairs that I really feel like you guys really resonate with or trade the most. We're going to first start off by talking about AUDJPY, EURUSD, and GBP Swiss franc. All right, so again, welcome in. Stay tuned because we are going to be covering all the pairs highlighted in red. And of course, those not highlighted in red, we are not going to be discussing just because I don't really see much on them. And I don't really feel like wasting your time because I really wouldn't be able to provide value in those areas. So we'll see what happens throughout the week with those pairs. If we get more setups throughout the week, then great, we will be definitely sharing those. But currently, we do have setups and really high probable analysis for the pairs highlighted in red.
Our sponsor, Blue Guardian, is the only prop firm that gives their traders a built-in tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know their evaluations are 40 and 80 days long, giving you plenty of time to hit their low 8 and 4% targets? Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Before I actually jump into AUDJPY, because that's the first one I'm going to talk about, and then we'll go to EURUSD and then GBP Swiss franc, I'm going to start off by talking about the US dollar and discuss with you a little bit about what I was looking for last week that actually played out phenomenally well, and then we had a very good follow through to the downside. So first and foremost with the US dollar, I know you're probably asking the question, okay, why not the DAXY? Why the US dollar? It's pretty much the same thing. I just like the US dollar. I don't know why. I started looking at it and it just stuck. So it's really no difference. The dollar index is really just a accumulation of a overall dollar basket of all the currency pairs. So Euro USD, NZDUSD, GBP USD, just a whole basket full. So that's really what the DXY is. So anyways, US dollar, let's zoom out to the higher time frames. And you would say that we're neither bullish nor bearish, right? And that is definitely probably the case. However, what I would argue is that we are currently lower time frame bearish and we still have more room to go to the downside in order to fulfill some sort of higher time frame objective. So we can see here that we came into that last point of supply, right? For those of you who don't know what supply and demand is, supply and demand for how we like to teach it. Now, of course, from an economic standpoint, it's going to sound a lot different, but from just a basic, pure understanding of areas of interest, change of character, which you're probably familiar with, I like to look at supply and demand levels as areas in which price fails to generate a higher high or a lower low, depending on which direction we're trading, and then acts as that last buying or selling volume in the market before continuing. Right, so in this instance, when this counter trend ended and we started to make that lower low to the downside, or AKA break that structure, that was that last buying volume that we came into. We can see those equal highs. We swept it, buy to sell. We repriced or created that supply, and then we fell, and that's where we started the downtrend. All right, so that's exactly where we came back up into that level. And before we came up into that level, if you recall from last week's pre-market analysis video, and by the way, if you haven't checked that out, definitely go do that. A lot of the setups that I discussed last week are still valid this week, and you guys don't want to miss out on it because if we do come into these levels, I fully expect these pairs to go in the right direction because they're just beautiful setups. But anyways, we talked about this last week, and especially in regards to liquidity and in the form of type 2 manipulation. This is something discussed deeper, that we go deep in our course with. And by the way, guys, if you really enjoy the analysis that we do talk about here and you do resonate with it and want to learn more about how we look at the market just from a very simplistic standpoint, but understanding the complex nature of the market, but figuring it out in terms of a simplistic, systematic type of approach to the market. Now, of course, trading is not simplistic, but what I'm trying to say is looking at it from a very simplistic approach to make your trading as least confusing as possible, because let's face it, trading can be definitely difficult when you're faced with so much information out there and you really don't know what to look at or even put it together and apply it to the charts, right? Having a very systematic approach to the market is definitely very important, and taking these complex concepts and dumbing it down into ways that we can all understand and apply, I think that's really what helped me, and I think that's where we can help you. So if you do really resonate with that, head over to my website at any point in time, aerialfxtrading.com. Book a free call with me. I'd love to just chit chat with you about how we can best help you along your trading journey. If it's the right fit, great. We'd love to have you on board. And if it's not, at least we'll figure that out during our call. Won't be long at all, just very brief. Just kind of wanted to talk to you about your journey, and then we'll go from there. All right, so anyways, US dollar, type 2 manipulation. We had that before we came into that overall supply. We created buy-side liquidity. We had that sell, so sweeping sell-side liquidity, sell to buy to sell, right? Now we talk about buy to sells, sell to buys, right? Manipulation, liquidity runs, but then we had this weird thing, and we had this sell to buy to sell. Why are we selling and then buying and then selling? Why is so much going on? Why are we taking liquidity on either side of the market? Well, it's building liquidity, buy side and sell side, before coming into the overall objective, which is this area of supply, that's exactly what we tapped into. So we create the resistance, and we come back down, entice retail shorts below the low, so really enticing them to take a trade really below this swing point here on the lower time frame. People think it's a break of structure, so they go short, whether that be a break below the low, break below this low, or even just a break and a pullback to look for shorts. That's exactly what they look to do. So they get trapped short, but prematurely. So when price pushes back up to the upside and sweeps buy side liquidity, now it runs their stops. What that also does is that makes people think, okay, well, this was just a false move, and now we're really looking to continue with the overall trend. But what people fail to realize is that we had an area of resistance and this area of demand. So we can't really just be buying, even though it is within trend. We have to take into consideration that area of supply, and I think I said demand, I meant supply, area of supply before looking at buy opportunities, right? So now if this area of demand here, right, if this, higher high, higher low, higher high, higher low, so that last point of demand actually held and we made another higher high, well, then that's a different story. Maybe we would look to, further continue with longs. But in this case, we had a beautiful reaction after sweeping buy side liquidity and even attracting buyers into the market with a break and maybe a lower time frame closure above this resistance level. We can see if we extend this out here, we have 3 touches, 1, 2, 3 retail shorts, right? We sweep the liquidity and we move in the right direction. So right in here, remember we talked about that area of demand. So that level of demand, we had a reaction from, right? So if we just mark that demand off, we had the reaction, didn't have the follow through. Why? Because we never made a higher high. We never created that higher high above that level. And then afterwards, we created that lower low. So now that is confirmed. Sell to buy to sell, failed to generate the higher high, last buying volume before the sell-off. Now this becomes our lower time frame supply level. All right, so that lower time frame supply level, I talked about that last week. And remember, this was Friday. Let's see, Sunday was right here. So Friday market closure, and then this is Sunday market open. So I talked about this level specifically and said that I would really like to see shorts from this area of supply, this last buying volume that failed to generate the higher high. So we had that reaction, and ever since we've just been trickling down. So I know that was quite long, but I really wanted you guys to understand just a basic way in which we look for entries based off of liquidity and based off of structure, based off of breaks of structure, based off of supply and demand levels, just a general overview of that. But now what we can do, since if anyone was confused about the higher time frame direction here, right, forget the fact that we had already reacted from a higher time frame level of supply on the higher time frame and made a lower low, and now we're looking at taking out this previous low here, or potentially reacting off of demand, who knows. We can scale in and see that even though we are kind of consolidating, we've reacted from supply, we have these relatively equal lows here, and then this unmitigated level of demand. So even if price, even though I would say it's higher time frame bearish, even if price actually does continue long, I would think it would need to sweep sell side liquidity first, come into that unmitigated level of demand, and then go long. So what do we have? Room to go to the downside, to this higher time frame demand objective point. All right, so had that entry, well, not really an entry, I don't trade the US dollar, but we could have compared that to like EU, NU, GU, UJ, all the other dollar-based pairs. Could have had an entry there, and then we would have rode it all the way down to sweep the next objective. What would that be? Sell side liquidity, area of demand. Now that could be a target, or that could be maybe TP1 out of a couple TPs and you let the rest ride. Who knows? Anyways, this is demand because this is where the counter trend broke to the upside. That's that last selling volume that failed to generate that lower low, just like we talked about at the beginning. So we ended up sweeping a lot of liquidity in here. Did have that liquidity run, but then failed to come into it. So we ended up stopping, kind of making that double bottom or that support level, which we like to talk about. So areas of liquidity are where we're looking to target in momentum. So the momentum is to the downside. We are pushing strongly to the downside. The dollar clearly has been weak for quite some time now, and I want to definitely continue to sell the dollar. Now we can take this analysis from the higher time frame, and obviously from the lower time frame perspective, we're bearish as well. We can take that analysis and compare that to all the other US dollar based pairs. So that's what we're going to do here in terms of looking for XXX USD longs. All right, so first and foremost, let's talk about AUDJPY. People love AJ, people love EU, people love GCHF. Want to talk about those first. So, of course, we were looking for re-entries from this level here last week. Of course, it just ended up trickling to the upside, but let's take a little bit of a look into the higher time frame and what we could be expecting next. So, of course, you can clearly see, plain as day, we're extremely bullish. Right, from a higher time frame perspective, it extends way over to the left here. You can see almost this, and this even looks like a higher time frame head and shoulders almost, right? Shoulder, head, shoulder, and then we had that liquidity run sell to buy. We came into that last point of selling volume to the left on the higher time frame. Guys, the concepts are the same all the time, whether it be a lower time frame like the 1 minute or the 5 minute, the 15 minute, the 30 minute, the 1 hour, the 4 hour, doesn't matter. It will apply to every single time frame because the markets are fractal. Everything happens on every time frame. Time frame is subjective, meaning that everywhere you look, it's either just a zoomed in or zoomed out version of the same exact thing. Right? So that is how we can understand time frame and its not necessarily its defectiveness. Time frame is definitely good to look at, but we can't get too caught up on only trading one time frame. Right? Or thinking that different time frames present different things. No, it's the same. So anyways, we can see that clear sell to buy. If you want to look at it from a structure standpoint, low, high, low, and then obviously we've made a higher high. So higher time frame, we're bullish. Now in here, from a lower time frame perspective, and we'll call this like a medium term, right? Medium term, we'll go like high, low, looking for that higher high, right? We haven't cleared that high yet, but we're likely to, definitely. So that's our medium term. Now our lower time frame is really going to be in here within after we had that sell to buy, and then we failed to generate the lower low, and that's where we started the uptrend on a lower time frame. So we can take all of that, and everything is aligning with each other in alignment. So definitely looking for continuations. We had that as equal lows, sell to buy into that prior level of structure, that previous swing point. Ever since then, we've been making higher highs, higher lows, and if you're a part of VIP, we've been catching all of these areas every single solitary week that it presented itself. Head and shoulders, fake out, ended up failing to create that lower low below this low, so the counter trend here has been broken to the upside now, as expected, because we did take liquidity, sell to buy, into that level, as discussed. We accumulated, last selling volume was in here, kind of almost like a break and retest of this head and shoulders. Almost retail is going short. That's a good area in which to take long after the higher high has been formed. All right, so that would be a good retest point. Price ends up accumulating lower time frame and going long from there. Again, counter trend, low, high, low, high. Really, these are our last two selling volumes in here, right? That's where we failed to generate that lower low and ended up making the higher high. So that would have been a nice re-entry point. We actually called that out as well. So kind of just going over the lower time frame here. That was another one. Last selling volume had another great entry. In here, last selling volume had another great entry upon the fake out of this head and shoulders, shoulder, head, shoulder, almost like a skewed one. We had equal high, so that objective was to the upside, right? Demand, or excuse me, not demand, resistance. We had equal highs right here, and just overall, that buy side liquidity needed to be run. All right, so called that out again. That's why we have that risk to reward. And now, again, the counter trend, low, high, low, high. That's our last buying volume with that supply. We failed to generate that lower low. We ended up making the higher high, breaking the structure. I was hoping to get that pullback into that demand to go long, but of course we ended up just continuing to trickle over and over again. All right, we never really got that pullback. So from a higher time frame perspective, we can just see clearly it's just mooning at the moment. So I don't really see much on it, to be quite honest. If you find a buy entry throughout next week, probably, you can bet your bottom dollar it's probably going to continue. But of course, nothing's guaranteed. Just from the momentum and strength of AJ right now, I would fully expect price to at least reach this 100 level. If we do end up getting a pullback now, that would be a level I look for. But as of right now, I don't think I'll be trading AJ for a little while just because it's extremely, extremely bullish. No setups at the moment.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
EURUSD. So with EURUSD, I'm going to do a very, very quick top-down analysis for those of you who haven't looked at EU or at least the higher time frame for it. So from a weekly time frame perspective, what do we see? Clearly, ever since really the inception of this chart back in 1980, well, actually 1971, we were making higher highs and higher lows. Look at this beautiful wave play. And look exactly where we came into. You see this last selling volume in here that failed to generate this lower low, below this low? We stopped and made the higher high. That's exactly where we came into. No wonder why we built liquidity prior to coming down into that level. Why did we stop here? Why did we stop here or here or here or here or wherever? We always do that. Maybe a fake out to the upside, fake break of structure, maybe a fake higher low, try to make a higher high, fix everyone out, almost like a skewed head and shoulders, if you will, right? And that's sell to buy. Now I fully expect price to go long. I think the US dollar is going to absolutely plummet, especially because of what's going on with the US government, what's going on with oil, what's going on really just with, fiat currency around the world as well. I just think the US dollar is just really going to tank. It's really going to be devalued here, probably going forward from a higher time frame perspective, just from economic data and just what's going on. If you guys have been following the news lately, I just think that we're really in for some trouble here because really the dollar is worthless. Ever since Nixon took us off the gold standard, dollar has been worthless. The only thing backing it is with accepting the sale of oil in US dollars. Now they're looking at the Chinese yuan or potentially another currency, which if that actually takes place, which I think it will, then the US dollar would really be meaningless, or it'd probably just go to zero, to be honest, which is kind of scary, but what can we do? Anyways, so continuations, we had that reaction from that level, and ever since we've been making higher highs, higher lows. Most important thing to see, current structure, high, low, high, low, high, low, looking for a higher high, right? So clearly, we've come into higher time frame levels of demand. Now we're looking at taking this previous high, so lower time frame, higher time frame, and now lower time frame is bullish. So higher and lower time frames are in alignment with each other. That's exactly what we like to see. Let's just quickly go over the mitigations of these levels. So higher high, overall pullback, higher low. That last selling volume, that sell to buy, that actually came into an area of demand. We've been talking about this all last year. This was like December, I believe. I think I remember calling that out. We never got the entry because it just didn't push down into it. It really ticked me off. But anyways, we continue. But we talked about all these levels. I think this was November. I know I had a really good entry, I think here late November. This is 1st of December. Yeah, I just remember trading EURUSD late last year, and it was just awesome. Anyways, we finally pushed down, mitigated that level, made that higher high in the higher time frame, and then finally had an overall retracement. We had that mitigation, called that out, took a little while, kind of chopped around for a little bit, and then finally we broke that structure right here to the upside. And then these two last selling volumes, right? These were the last selling volumes in the market before price broke the structure and made the higher high. So when we made that overall higher high, we finally had that overall pullback into those two areas of demand. And we can see the accumulation that occurred and the very sharp move that followed, right? The accumulation and the very quick sell to buy. And then we broke the structure to the upside, failed to make that lower low. And I called this out at the beginning of June, actually. So about 2 weeks ago, I said that this could either be one of two things. Either this is a fake break of structure, and we end up taking buy side liquidity and then running sell side before running long, right? So that type 2 manipulation. Or this is an actual reaction fulfillment of the accumulation schematic, an actual break of structure, and the pullback back down into our last selling volume, that area of demand for continuations to the upside, and that's exactly what happened. So ended up continuing there, so really great job for those of you who took longs from our level. Congratulations. Now I am looking for continuations long. Price is definitely bullish. Dollar is weak. We had that analysis when it came down to the US dollar there. So what I was looking for at the start of this week was there was a lower time frame level of demand in here. It was really just, if you take a look at structure, high, low, higher, high. So I was thinking, okay, well, some sort of higher low somewhere in here. All right, this is the range currently. So I'm thinking, okay, well, this is already mitigated. You could do that level there, which it ended up coming into. Just never got deeper into that level, which is why I always say sometimes it's okay to have multiple entries. Many people are like, well, that's a huge stop loss. Well, what kind of risk to reward do you have? Obviously, it doesn't have anything to do with pips or how large or small your stop loss is. What is your risk to reward? And I always say, it's okay if it only has a small retracement. Not always will it have a deep retracement into its extreme discount. All right, so there was a lower time frame. I know I'm on the 1 hour, but on like the 15-minute, I believe, there's like a lower time frame level of supply. So you could have had one here and then one at just the overall selling volume, right? So one right there. I personally didn't. Kind of stupid of me. I don't know why I did. Maybe it was just a brain fart or something. We all make mistakes. So I should have done that. But anyways, those two levels would have been great. And then we started to create sell-side liquidity, right? 1, 2, 3, 4 touches of this trend line. Of course, dollar is extremely weak. We could easily just continue. I mean, we don't have to sweep sell-side liquidity now, but I'm leaving this level open just in case we have an overall retracement. So we can clearly see this as a reaction from that higher time frame level. So now we had that expansion. Could we have an overall pullback for another expansion? Absolutely, because we're looking for an overall higher high in the market, right? So this could turn into, right, the reaction, lower time frame shift in structure, and then lower time frame break, and then something like this. Then it would turn into high, low, high. You see how the markets are fractal like that. Higher highs and higher lows are the same, no matter what time frame you're on. Right, so we have two potential areas, just really the most recent selling volume, right? Areas of demand filling this huge imbalance that formed during New York session last Thursday. So, yesterday actually. So we could just come back down into these levels to continue, or we could have an overall retracement, sweep sell side liquidity, hopefully maybe come into this level here and then go long from that level there. So that's really what I see on Euro USD. GBP Swiss franc. So GCHF is quite interesting. So from a higher time frame perspective, I would say we're probably definitely bullish. And no, it looks like we're in consolidation, which we are. However, we had a clear liquidity run, which I'll show you in a second, and now the structure is starting to shift. We're making higher highs, higher lows, so might as well continue to trade with the structure. If it breaks, fine. We adapt to the market and look for new setups. That's all we can do. All right, so from a 4-hour time frame perspective, we had the clear liquidity run, clear sell to buy, break of structure to the upside. So we took all that sell side liquidity. Most important thing was the failure to generate the lower low. Where is the lower low? Or where would it have formed? Below that low. So when we failed to go lower than that low and then broke the counter trend structure here to the upside, now we can be really, really comfortable with continuing to buy, having higher probabilities that it will continue long. So there was an actual sponsored move here, lower time frame level of demand. It was a beautiful, beautiful area. However, just because price was still technically bearish here, I didn't want to take a chance of buying at that level. What I wanted to see was if price was going to actually fail to generate a lower low and make a higher high, I wanted to see the reaction in the lower time frame break, which you guys can always do. All right, you don't have to just set buy or sell limits. You can wait for reactions and then take trades off of those reactions. So counter trend, low, high, low. We accumulated lower time frame. I believe there was divergence on this as well. We ended up reacting from the level, made the higher high. So now it's confirmed. We've made that higher high. So where is our last selling volume? Well, pretty much just right in this general area right here. I would say that's really where this lower time frame structure was broken to the upside, kind of had that repricing, that failure to generate the lower low, higher high. I do apologize, guys. I know I'm talking fast. I just have a lot to go over and don't have a ton of time. But anyways, rewatch this video if you need to, or watch last week's pre-market analysis. It's going to be relatively the same. Not much has changed from a higher time frame perspective, but there will be obviously new setups that I will talk about here that I didn't talk about last week. Anyways, had the reaction from the level. Again, counter trend, low, high, failed to make the lower low, higher high. Area of demand. I won't get into all the nitty-gritty lower time frame details. You guys can go check that out yourself. It's actually pretty cool what's going on in there. Take a look at it for yourself and let me know what you think. It's really interesting. Anyways, again, generated liquidity prior to coming into the level, right? In here, we generate buy side liquidity and sell side liquidity. When we generate liquidity like this, prior to coming down or up, in this case, since we're bullish, down into this level, it just makes for a more highly probable setup because we're generating liquidity. And we know that liquidity has to be generated for a false move, for a real move to occur, to free all this liquidity up, to have the contracts and the liquidity available, the money available essentially, to not necessarily mitigate per se, but to buy from this level from a higher contract standpoint, larger volume standpoint, right? And for more lessons on liquidity, I believe I talk a lot about it throughout all the videos, but I do give a very good lesson on last week's pre-market analysis that I think you'd find valuable. So definitely make sure you guys are tuning into these. These can be quite valuable for you guys in terms of just, obviously learning, that's the most important thing, but of course the setups as well. Anyways, had that reaction and it just chopped around for a while. Finally had the move to the upside. I wanted to pull back down into our last selling volume, never got it. But we can still see that I think this could be, 1, 2, 3, potentially an overall pullback to some degree, or you could classify this as, the swing point. Since it didn't come back down into it, if it actually came back down, I would still like to trade it because it would be a sell side liquidity run, mitigation, continuation, just like we're seeing here. Sell side liquidity run, boom, to the upside. Sell side liquidity run, boom, to the upside. It happens all the time. That's why liquidity is generated. So anyways, if we do just continue with the lower time frame as we're seeing, I really like this level of demand here. And the reason why is because of the counter trend. Low, high, low, high. We had that last buying volume, so that supply. Then we failed to generate the lower low, kind of had a little consolidation, and then we made the higher high. So that was the last selling volume, but really right in here is the demand. So I think that if we come back down, sweep sell side liquidity because we're generating it, 1, 2, 3, 4, 5, 6 touches, sweep it, mitigate, continue. It's just continuations with the structure. All right, so that's my area of demand, and that's where I'll be looking to buy if it pulls back. All right, now going back up to the top, I know I wanted to discuss AJ, EU, and GCHF. Now let's hit on AU. So AU, don't really see much of interest, to be honest with you. Really the biggest thing, this is where a lot of people go wrong, is not looking at the higher time frame when it comes down to trading. Higher time frame is your friend. Please do look at it. It will help you. It's not meant to be scary. It's there to be your friend, I promise. Anyways, if we understood the higher time frame, we can see clearly sell to buy, reprice, continuation. You can see that that's the area of demand. So, of course, price comes into it, reacts. That was back in 2022, 2 years ago. Last October. And then our last selling volume was right in here. How do we derive that? Well, counter trend, low, high, low, high, low, high, low, high, failed, higher high. Really, this last selling volume in here is really just within that area. So that's the demand level in which we wanted price to come into prior to going long again. And we can see in here, there's probably a lot of fake outs, right? Buy side liquidity run, sell side right there, buy side right there, sell side right there, buy side right there, sell side. What's going on? Why are we taking buy and sell side liquidity on either side of the market? To generate liquidity, shake everyone out of the market before the real move occurs. The real move usually looks very trickle-like. We're seeing real moves occur in the market, guys. These are real moves. Real moves are just trickle-like, right? You'll get this experience gain this knowledge as you get experience in the market. These are the real moves. This is what sets the trend. This is what sets the real trend. And then we can finally start waving potentially and finding our areas of interest. But really, this is what sets the trend, starts the real trend, in my opinion. Just based upon my experience. So anyways, we came into that demand. We had, 1, 2, 3 touches. We actually had a break and retest of the trend line. So anyone who is shorting because of retail concepts obviously lost. And it doesn't make sense why they do that, but that's retail. Anyways, also head and shoulders. Shoulder, head, shoulder, great fake out, continuation. All signs are pointing to long, guys. If you are trying to buy the dollar or sell XXX on a semi-long-term to long-term standpoint, I just don't think it's going to work out. Maybe on a short-term standpoint, but again, even if you do find a short-term, maybe counter trend to the downside, I don't know. It just depends on what it looks like, right? What I wouldn't do is I wouldn't try to just sell it like right here just because you want to take a little bit of a short, and it's just, what's the probability, right? Ask yourself, what's the probability? If we're absolutely mooning to the upside, why are we trying to look to sell it? Let's just have common sense. right? Common sense is something that people really do lack in this world, and it's so frustrating dealing with some people because it's common sense and everyone should have it, right? But it just baffles my mind how people sometimes don't. But anyways, just ask yourself, am I trading with the trend? If the answer is no, don't trade it. There's always going to be new setups, right? We don't need to be dumb. Okay, so overall, if we get an overall pullback, really this is where our last selling volume occurs, unmitigated around 656. I don't think this is going to come into it anytime soon, if at all. But really what I would like to see is some sort of, either what we do is this. Either we react off of that demand and we either break the structure and there's like an area of demand here, we can look to buy it from there, or we end up generating liquidity, sell to buy, break of structure, pull back long, or we maybe take sell side liquidity first and then just continue with the uptrend. There's so many different things that can happen. Ultimately, I don't know if price is going to sell off to go long first or if it's going to react to go long first. Either way, I want to see some sort of reaction off of demand and then we go long and pull back to long it, or we have a sell side liquidity run, which I'd like to see even better, and then maybe have some sort of maybe reaction from that demand, right? Reaction, sell to buy. So that's that repricing, and here pull back and then we long it. So I don't know if that's going to happen, but that's what we want to see. We don't want to spend hours and hours and hours a day analyzing charts because that's just, first of all, it's too time consuming. And second, you don't need to. You don't need to sit in front of a chart for 10 hours watching price. It's only going to affect your psychology. It's only going to make you think you see something. Just like if you sit in the dark, right, and you're scared, your eyes are going to play tricks on you. The market is going to play tricks on you. If you were watching it, it's just like you're going on a roller coaster. You're doing something that you don't want to do. Time goes by naturally slower for you, right? So it's the same thing with trading. When you're looking at it, time goes by slower so that you're more enticed to take trades, right? Because you're watching it. And any single move, your brain is constantly trying to formulate a reason why it's doing that. And if it catches your attention, you impulse sell or buy. And that can create ineffective trades, ineffective decision making, right? So we need to be patient with these setups. We don't need to be trading every day. So I don't really see anything on AU either, right? I want long-term buys, but until a setup presents itself, I'm not trading it.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.
EURGBP. So EURGBP is extremely bearish. We can just clearly see that from a higher time frame perspective. I do think that we've already taken out this previous low, but I think we're going to definitely come down into 8.5, most likely. 8.5 is a psychological level. It's also this last selling volume here before going long. We can see the counter trend, boom, 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 boom. We stop, long it. Doesn't mean that I think we're going to react and just go long and buy it from that level. I'm not saying that. I'm saying that since EURGBP is so weak, that would be the first objective point. Fine, if it goes short, whatever. I mean, it's bearish anyways. I'm saying that if price is going to go long against the direction in which I want to trade it, that's where it could potentially do it. So that's where we have to build confluence, is if price pulls back into my areas of interest to short based upon my rules and confluences, and it hasn't come into objective, then I know it's a more highly probable trade to trade, because now if it pulls back into that level before coming into the objective, now we have an excuse to sell it because it hasn't reached the objective yet. Now that's the excuse to push price back down into that level. So, of course, it could easily just continue to die. I mean, EG could fall off the face of the earth. Who knows, right? So, until that point, and even if it does hit this point, I probably still will look to pull back and short it just because we're extremely bearish. Pound is strong, by the way. So, that would help your EG shorts. So, anyways, lower time frame, we're just continuing to trickle, right? Supply, mitigated, lower low. So, let's do the lower low, lower high thing. Low, high, supply, mitigation. Low, high, last buying volume, supply, mitigation. Low, we haven't broken yet. Now we have. So that was already mitigated. So that's probably good to go. That we don't need to take into consideration that supply level anymore, meaning in there. But what we did have is that huge wick. So let's just zoom in and see what we can find. So I would probably classify this now as low, high, low. So any pullback within this range would probably be good. So where is our last buying volumes? Well, we have one right here that's unmitigated and one right here. So either of those two levels for continuation short, I could see. Start the week, probably would like to have it at certain time of the day. London, New York session, because this is, well, London session based pair. But anyways, from a higher time frame perspective, if we look at price, we can see that this is, before we broke the structure, where was our last buying volume? Well, it was really right in here. Low, high, low, high. I mean, you guys can see it. I mean, for my VIP members, I've been talking about EG for months in regards to all these areas of supply just constantly being mitigated. We had so many great trades from this. This is amazing. Anyways, equal highs, huge buy to sell. We actually had a lower time frame distribution from that level. I remember that vividly. Had a great opportunity short, pulled back into supply right in there. You see that last buying volume? Whoops. Right there. We shorted it. Had a little drawdown, but anyways, a couple pips. Nothing when it's smart money, right? So fell into the downside. That's our last buying volume, because if you look at the counter trend, high, low, failed, lower, low. So if we get an overall retracement, I'd still probably look to short it from that level potentially. But that could be weeks or months away. Who knows? So short term, these are my levels. So you guys can go back and look at those if you missed that. So we talked about EU, ECAD. So ECAD is interesting. So ECAD does have equal lows. We are in a bullish uptrend. So that's good. For one, we're bullish, right? Let me get rid of this. We've already taken, actually, yeah, we'll get rid of it. We don't need this anymore. We're in a bullish uptrend right here. Higher time frame, bullish uptrend. Equal highs, perfectly. This high right here did not even take out that high. So they're actually perfect equal highs. So that's buy side objective. We have buy side objective. We have higher time frame bulls, right? From a structure standpoint, we have a high, we have a low, we have a high, we have a low. We're looking for a higher high now, right? So we actually came down, even though I was either wanting one of two things. Either wanting this to be a sell to buy below that low, because that would have definitely confirmed that area of demand for the reaction that we had, or price to come back down, sweep these equal lows, and then start the uptrend like we're seeing here. That would give me more confluence, but it didn't do that. We actually did come back down into the last selling volume. So we did actually mitigate that level. Of course, I would never have taken a trade from there. But in hindsight, looking back on it now and looking back on this current pullback or mini uptrend here, that's the reason why we came into it. So we ended up sweeping liquidity, those lows, sell to buy, and then we came back down into this last selling volume here. Mitigated perfectly. Smart money concept doesn't lie, guys. I prove it time and time again, every day and all day. Right? It's real. It's there. It's how the market works. Higher high, higher low. Higher high, higher low. Where's the last selling volume? Look at what do I always say? What's the question I'm going to ask? Look at not a question, statement. Look at the counter trend. Sorry, I'm just so excited, guys. You can tell. Low, high, failed, higher high. So, demand, boom, mitigation, go long. Where's the last selling volume here? Now, definitely, you can have an area right here. That's a bad line, but you know what I mean. Last selling volume's right in there. What I'm looking for is maybe this area of imbalance. Huge imbalance or that level of demand. Either one. Probably two of them because there's imbalance there. And, are we likely to come all the way back down into it? I don't know. Like I said before on the other pairs, have multiple areas, right? If you have multiple areas that meet your rules, split up your risk. What are we forming here? First of all, equal lows. So we know we're probably going to sweep Friday's low because this is Thursday. Yes, that's Friday. Likely to sweep Friday's low, fulfill the head and shoulders, fake out the neckline, mitigate the imbalance, just continue with structure, and then just go long, right? Now, why are we buying? Well, obviously with all the confluences, but what else do we have? We have objective. We have this is a whole entire region of supply. So overall pullback, and then we started the fall. Overall pullback, and then we could fall, right? Potentially. So where is that last buying volume? Well, it's really right in, this is where we broke the structure, right? So really this is the last buying volume, but within this level, we have that repricing. So that supply. So I want price to come back up into at least like 1.4540, 1.4550, 4560, somewhere in that level. So we do have further, I think we should have further room to go to the upside. So not the biggest risk to reward, almost like not even a 1 to 3. So really not the best. But what you could do is again, split it up. Half risk here, half risk at the same, well, really half risk here and half risk here. Entry, stop, take profit. It would be a better risk to reward, and have both just in case this one only works out. But anyways, yeah, so we can pull our fib from the high to the low. So I mean 61, 71, 78, just getting deeper into premium. Now we're not trading from these fib levels. We don't trade retail, but it's nice to see where discount and premium is. So into these levels is really kind of what we're looking for in terms of premium. All right, so that's EUROCAD, GBPCAD, because we talked about GCHF already. Like we said, pound is strong. We're looking for pound strength across the board. GU, GCHF, I mean, everywhere we go. So start off on the daily. Yes, we're higher time frame bearish here, but currently, I mean, we've been bullish since 2022, September or so. I mean, I'm not going to fight this trend here. And we can see we have a lot of imbalance, equal highs, buy to sell. There's a lower time frame repricing in here because on the lower time frame, there's a trend. High, low, high, low, high, low, high, low. That was the failure on a lower time frame. You can't see it because it's the daily. But if you scale in, you'd be able to see it. And then that's our area of supply. So unmitigated level of supply. Haven't come back up into that yet. We're still bullish, so definitely could see that. Now, what do we see here? Where's the structure? Well, many people would say high, low, high, low, high, low. So we need a high and a low. Well, yeah, that's true. That's a possibility. But this high did not take out that high. What did? This did. So this is the range. What could this also look like? Just kind of zoom back and look. All right, just take a step back. Could this potentially be a skewed head and shoulders? Could a shoulder be forming to where we fall, come into an unmitigated level of supply, or excuse me, demand? This is the low, the high, the low, the high, the failure, the higher high. That's that demand level that's unmitigated. We have a ton of imbalance in here, from here to here, ton of imbalance. That's a definite possibility. High, low, high, low, high. Definite possibility. Fake out of the neckline, sell to buy, right? So we could easily see something like that if we get a break to the downside, okay? Because we did generate relatively equal highs in here. Could that be a buy to sell and we come lower and fulfill what we talked about? Potentially, because that is the last selling volume within this counter trend. We have the low, the high, the low, the high, and then the failure, and really the failure right there, right? And that creates a huge imbalance, just straight buying volume right there. But anyways, the reason why we could also be looking for these levels in here, if we don't actually have that pullback into 1.64, is the fact that we swept sell side, so that sell to buy reprice. You can see that selling candle, that repricing event, that demand that formed below the sell side liquidity, higher high in comparison to that high. Pull back, what do? We generate equal lows, generate liquidity prior to coming into a level. I say it all day long, right? Generate liquidity, equal lows, people try to buy at support, people come back down, get swept out, it only mitigated demand, and we continue with the trend as it's supposed to, all right? So now what do we see? Well, mitigated that demand level, and now we broke the counter trend, low, high, low, high. So now we can either see a pullback into the most recent demand, because you can see high, low, high. We could just go like that, right? And that would be some sort of overall pullback continuation, or we could have a deeper retracement, maybe, into this imbalance. It's huge straight imbalance, just in case this acts as sell side liquidity and then comes into that level and goes long. That could definitely be a possibility because this is a overall sell into demand, so you have liquidity, equal lows, higher high, overall pullback, higher low for a higher high. That's what we could see. That's why we have two levels here, either this or that. All right, and pause the video at any time, guys. I know I talk fast. I just have a lot to go over. All right, so talk about all of these. Okay, let's go a little bit quicker here. I don't think we need to do full top-down analysis, especially on NU, because we know the overall directional bias on NU is bullish, right? We know dollar is weak. We don't need to be going into every little detail. We know that from a higher time frame perspective, we had a clear, not sell to buy, but really just, well, I'll go to the 4 hour. I'll do that. You can see that counter trend, low, high, failed, higher high. I wasn't looking to take buys off of that demand when price came back down into it, just because that's a huge area of demand, and we could have easily came lower, like deeper into here. Whoops. Deeper into like here. But we saw the reaction. Right? We saw the reaction, and what do? We generate equal highs, generate sell side liquidity. So when we came back down into it, it was the excuse, first of all, to sweep sell side to mitigate, and then attack buy side up here. All right, so that's what we're looking to do. And on the 1 hour time frame, if it will let me go there we go. We can see that Had our low, our high, our low, our high, our failed to make the lower low, higher high, overall pullback into that demand, and then we went long. So essentially had the reaction from the level, failed to make the lower low, higher high. So that's exactly why we were looking for pullbacks into our demand zones to go long. We never got them. So I'm still thinking that if price comes down into it, I still would like to see longs, right? Especially because that was our last buying volume that we reacted from. So many people would think that that's a sponsored candle, which it could have been. Let's just see what time it was. 9 a.m. So it could have been, right? But we never had follow through to the downside. Instead, we made a higher high, so that will naturally flip from supply to demand, especially because now we're bullish. So those are levels. Lower time frame in here. What's interesting is just the continuations. In case we just continue with the lower time frame trend, we could definitely do that. If we have an overall pullback, then those levels as just discussed are definitely still valid. All right, so high, low, high. Where do we come into here? And why did we have one? If you see 1, 2, 3, 4, like 5 touches, and then we had that sell to buy. We came into nothing, right? Or you can say imbalance, but it's not nothing. For those of you who are in our advanced crash course, that's how we talk about in depth everything you need to know on how to be profitable, you would know that this is an inside supply. Why? Because high, low, high, low, high, low, failed to make the higher high, lower low, obviously. But then when we broke back above it, we never had the reaction like a regular counter trend, like a low, a high, a low, a high, a low, a high, a reaction, and then we long it. We never had that reaction. We busted right through it. That creates the inside supply, okay, or really inside demand, I guess you could say. So that's how we had that reaction. But anyways, now we made the higher high. Now we could come back down into our last selling volume here. I don't know what time frame I was looking at before. Maybe it was like 10 minute. Yeah, like right in here. This is our last selling volume right there. Or just into this imbalance, just in case we don't come back down, all the way back down into that level, maybe 6,190 psychological level, round figure, maybe 50% of the imbalance or something like that, just into that region. And what are we also creating? Well, we're creating relatively equal highs and then equal lows. So I would like to see either one of two things. Either just a sell to buy into the levels to go long, or a buy, entice buyers, come back down, take their stops, entice sellers, come back up, take their stops, and continue long. So that type 2 manipulation. And obviously, if price does break to the downside, we have those higher time frame levels to look at. USDCHF. Oh, I like USDCHF. USDCHF is great. I love it. It's awesome. It has a great setups. Especially this one right here. Really, really love. So, dollar's weak. Okay, we can all agree. We've been talking about it the whole night. So, what do we naturally expect when dollar's weak? Well, of course, you could be in a pullback to where you could long it, but of course, we're not here. We're finally switched or flipped to the downside. So, continuing with the overall direction of the market, where are we going? Where are we targeting? We need to have objectives. We don't just trade randomly. We don't just push buy and sell when we see a setup. We need to know why it's going to go in our direction, right? Why are we going to make money? Why are we going to be profitable traders? Why are we going to be that? Well, because we have an objective as to the reason why it's going to go in our direction in the first place. Right? We don't just sell it because we want to sell it because it looks good. Well, why would it sell off in our direction for us to make money? Well, there needs to be an objective. There needs to be a reason why it's selling. Well, where's the objective? Well, clearly, we're in a downtrend. Where is the liquidity? Below this low? Below this low. Higher time frame low back from 2020 or 2021. Sort of like January 1st, I believe. Like January 6th. Anyways. Continuing, lower low, lower high, lower low, lower high. Okay. 4 hour time frame. This previous high was swept, and then the whole counter trend in here was broken. We failed, and then we're starting to make lower lows and lower highs. So now the higher time frame is bearish. Now the lower time frame is bearish. The objective is down here, and we have areas to sell. It's how we're building confluence every time, right? So let's look at it. Last selling volume, demand, higher high, pullback mitigation. Last selling volume, demand, higher high, pullback mitigation. Last selling volume, higher high, pullback mitigation. Liquidity run. Last selling volume, higher high, liquidity run to the upside. Pullback, mitigation, sweeping liquidity, all this 1, 2, 3, 4 touches. This could have been a huge sell to buy. In this case, it was not. And then we can see when we started the trend to the downside here, we'll see the buy side liquidity run here. When we had the reaction from the demand, we did take liquidity, but in terms of the counter trend, high, low, this is demand, failed to make that higher high, and instead what? Lower low. We broke structure. We're bearish. Okay. So now you could have looked to pull back into that supply zone. It's that easy, simple demand to supply flip. Had the reaction off demand failed to generate the higher high, so it's no longer valid, we made the lower low, so that turns into supply. Could have had an easy short from that level. Anyways, continuations, lower low, lower high, lower low, we have one of two options. Well, in case price doesn't pull back a lot, it's just a small pullback and it goes short, well, then we just have this overall buying volume. But I would like to see a deeper retracement, of course, into premium and into that supply level and repricing. Why is that repricing? Look at the counter trend. High, low, failed, lower, low, supply. Okay. Looking for shorts down into at least 6757 psychological level if you want one, 6750. NZDCHF. Looking to actually buy NZDCHF. Why? Because New Zealand dollar is strong, Aussie dollar is strong. That's why we're buying NJ, AJ, AU, NU. I mean, you name it, we're probably buying NZD and AUD. So, excuse me, guys. I don't know what I have. I think I'm getting sick. Anyways, so we've been short. I love NZDCHF. It's probably my favorite pair. Yeah, it's my favorite pair. I just had so many beautiful trades. I mean, NZDCHF for smart money, especially for the way I look at smart money, it just works so well. And I hardly lose when I trade NZDCHF. I hardly lose. I do, of course. I'm human. Of course I lose trades, but I love it. It's amazing. This just waves so nicely. So anyways, higher time frame, let's just look at this. We don't need to go into everything. Low, high, low, high, low, high, right? So where's the range? Well, from here to here. Haven't made a lower low, haven't made a higher high. Okay, cool. So overall pullback is right here. Failed to generate the higher high, we made the lower low there. So where's our last buying volume, lower time frame? Well, I don't know if you can see it, but it's actually really beautiful in the 1 hour. You just have to zoom in. There's one right here and then one right there. Very, very beautiful. And that's where we had the liquidity run, buy to sell into another level of supply. And that's where we broke the structure. So had a great couple of trades at that time. That was back in, I believe, beginning of April, end of March of this year. So lower low, and then I really wanted price because we were creating a beautiful trend line to where we could screw retail traders over. I was really hoping that we would come back up into that level. Why? Because first of all, we're bearish. Second of all, that would have been the mitigation of the supply. And third, it would have been the catalyst to drive price lower to sweep stop losses of everyone who was buying with this stupid trend line. All right, so we ended up breaking it to the downside. But what we didn't do is we didn't create a lower low. We actually reacted off of that demand at that last selling volume. Now, what I'm not telling you is this. I'm not telling you to just buy at every demand or sell at every supply. If we're bearish, 99% of the time we're going to make a lower low. Okay. Of course, in this case it stops. Of course, I would never have bought it there. Even if this same setup occurred today, even if we went right here and price was just like that, would I buy it from that level? Absolutely not. Why? Because we're bearish. We could easily make a lower low. We could have kept dying, right? But we didn't. Obviously, we stopped, so we had to watch price. Let's just adapt to what it's doing and take the new setups as it comes. So in hindsight, I went back and saw that level. So that was an area of demand. We accumulated in price. And then we had a phenomenal trade last week in which the accumulation resulted in the break of structure. Low, high, low, high, low, high. Failed to make the lower low below our previous low. Higher high. So where do we pull back into? Our last selling volume, or in this case, imbalance. Last selling volume was in here. If we scale in a little bit, maybe go to the 15 minute, what do we see? We can see, boom, that repricing right there. Doji, I love it. 5480, right above that level, psychological level. What are we doing before? Oh my gosh. 1, 2 touches, 1, 2 touches, channeling, fake out retail to go short. We mitigate, we go long, we make money. It's how it works. So 1 hour time frame. Now we've failed to generate the lower low. We've made the higher high. So now we're pulling back, high, low, high. So even if we are to go short, let's just look at the last buying volume. I'm not going to sell it from there. Why? Because we have equal highs and we have unmitigated levels of supply. It would be dumb. So obviously I'm going to be selling here, but not here. But that would be a good target for any buys. TP1 maybe, or TP2. But it's also good for confluence purposes. Why? Because we know that if price is going to go short, it's most likely to do it from these levels, but it could do it from that level because that's the imbalance fill, that's our last buying volume, et cetera, et cetera. So if we don't come into these levels or this level first and we mitigate and we get our entries, that gives us a higher probable chance for us to go up and at least hit that level, right? But what if it comes up and hits that level first? Am I still buying? Yeah, I will still be. But it just tad bit lowers the chances of it succeeding just because you've already come into a level that you would see a reaction from here. And these buys wouldn't be as probable, but I would still buy it. It's still extremely probable. But anyways, so structure, high, low, high, right? That's what we're looking for. Especially the third drive. 1 drive, 2 drive, 3 drive is the highest probable drive. 15 minute. And I don't look at time frames, I'm just saying them as I'm flipping through them. Where are our last selling volumes? Well, we have a huge imbalance. I can see, anywhere in here, 550 psychological level, just so somewhere into that imbalance. We have this consolidation, so that's going to be demand, and we have our last selling volume here. This is really where when we had that sell to buy within the counter trend, we had low, high, low, high, low, high, low, high, failed, and then kind of failed there. So anywhere in that region. So 3 levels of potential mitigation for demand. What are we forming? It's just liquidity upon liquidity, I tell you. Shoulder, head, shoulder. I want to see the fake out come this week, mitigate that, level that, or that, whatever. It doesn't matter. These are my range. This is the range in here. Third risk if you want. Something like that. Looking for that sell to buy to go long. All right. NZDCHF's very, very pretty. Love it. UJ. So UJ is a little tricky, even though it is extremely bullish. I want to see further upside. However, from a structure standpoint, you have to just kind of, give yourself cross eyes a little bit and not look at all the little tiny little structure points. What do I mean by that? Give yourself cross eyes as in look at it just from a basic structure like high, low, high, just like the overall high, low, high sequence, right? That's what I mean. So when we're looking to trade it from our level of demand, could we come back down and go like this, sweep sell side, maybe come into imbalance of some kind and go long? Yeah, you could. So am I telling you to put stop maybe below here? Well, what if price comes back down, sweeps that stop, kind of comes into something in here, just whatever, chops around, goes long? So am I telling you to put stops here or stops here? Well, that would be kind of big, right? So what I'm saying is we just have to be careful. Let's go to the 4 hour first. We're extremely bullish. I'm not even going to get into everything here. These were awesome trades, by the way, guys. For those of you in VIP who took these, congratulations, freaking awesome. You guys have been killing it. But if we are to go short from a higher time frame standpoint, this is the last buying volume in here. We can just see with the structure, high, low, failed, lower, low. That's that last buying volume. Also, tons of imbalance in here, straight selling volume in there. So we're likely to come up into 145 psychological level. We're above the 4 hour 50 EMA. We're above the daily 50 EMA. We're above the 1 hour 50 EMA. And look at the 1 hour 50. It's involved with this level of demand. So that could be a good confluence when it comes down to pulling back into that level to go long. So I'm looking for continuations. 4 hour time frame, just from a structure, high, low, high, just mitigation, just we pull back into the structure point, higher, high again. So I will be looking to trade this long to start the week. Obviously, if it comes into it Sunday, we don't trade Sundays, we don't trade market open. But anyways, in here, we had the overall pullback, we had the break of countertrend structure, we had the mitigation of the demand, we actually swept liquidity, sell to buy. Didn't break the structure. This was the structure right here. If we were going to go short, we have to break this low. Just because we broke that low there doesn't mean we're bearish, right? We broke the structure, so this becomes the new range right in there. Okay, so came into that level, swept liquidity, went long, chop, sell to buy. Again, same deal over and over again. This low here and this low here was swept by that level, and then this was the last selling volume. Right here we had that, remember we had the sell to buy and we chopped, and then we finally made the move. Again, the mitigation is just really where we took this liquidity before. Continuations, 15-minute time frame, I think is where we saw it. Yeah, 15 minutes, so higher high, higher low, higher high, higher low, looking for a higher high, imbalance, 15 minute, really wasn't much, just straight imbalance. So that could have been something. Higher high, higher low. You could see this as your repricing. That is your last selling volume demand. Boom, look at that. Beautiful reaction. Higher high again. Where's the counter trend? Low, high, low, high, low, high. Well, that was a bad drawing. I messed up. Low, high, low, high, low, high, failed, higher high. That's that last selling volume. So what we could do is do this. What we could do is simply just place, is that Friday's low? That's Thursday's low, so we probably should be fine. We could place our entry here, stops below the low. If we come lower, then we'll just sit on our hands because for one, we're bullish, so we don't want to be looking to sell. We don't want to be too quick to judge a break of structure for a pullback and a sell-off because likely what is it? A liquidity run for your continuations. Everyone tries to short off at like see this little break here and they try to short. No, it's probably just going to keep going long. So if this doesn't work out from this demand level, I would look for some sort of, something like that. Why? Because then that would be to start the week, a sell side liquidity run, sweeping the prior day or the prior week's low or whatever. And then having a reaction, repricing or failing to generate a lower low, higher high, that would be a great area of demand if that formed to be looking for continuations for the rest of the week. All right, so something like that. We're going to adapt throughout the week, but guys, I can't predict what's going to happen. Well, what do I mean by that? I don't know what's going to happen on a day-to-day basis, so I can't give you guys updates because I'm only doing this once a week. So if you guys are interested in joining our VIP group to get updates every single day, feel free, book a call, love to talk to you. But of course, I can only do these on the weekends, so I can only show you what I think could happen potentially throughout for the week. And of course, things could change, right? If we look at this, I could tell you I love this area of demand to go long. Cool, great, whatever. What if it goes like that? And then this? Well, this video is Friday, right? So I can't tell you that this is going to happen. But if it does, you should be prepared. But at least VIP gets real-time updates. So if we do see something like that, then we can take advantage of it. UJ, NZDCAD. So I'm going to talk about AUDCAD first, just because it makes more sense. So AUDCAD, I'm going to go quick with this one because it's really not much. It's really like AUDUSD. I don't really see much with it. Guys, go back and look at the prior pre-market analysis. I would just go back and look at it because I talk about AUDCAD in depth and I go from a top-down standpoint. And it's really cool to see how everything starts to unfold. And when you really start to see stuff from a top-down perspective, you really start to understand it more. And it's really, really good to see. So go back and watch it. I'm not going to take time. I'm already over time here. But anyways, from a higher time frame perspective, we're bullish, right? Bullish, we're mitigating every little area of demand. You'd have to scale in to see all this stuff. There's demand in there, beautiful reaction. We accumulated last selling volume in here. We had imbalance, last selling volume, demand, whatever. I'm not going to go over it. Creating liquidity, equal lows, equal highs, come back down, sweep sell side. Now we take buy side, mitigation of the level, and now we can continue with the lower time frame as we're trading long. So we break structure to the upside. We can either just continue with the lower time frame here, in which I have a setup for, or we have an overall retracement, maybe come back down into demand of some kind. Again, I'm not going to talk about this too much just because it's not really pertinent. But in terms of a 15-minute level, just because we're liking to see, EUROCAD go long, NZDCAD go long. So I would like to see AUDCAD go long as well. And we're following the mitigation train pretty well here. Last selling volume, mitigation, imbalance, mitigation. So sweep of liquidity. Imbalance right here, hopefully get that mitigation, sweep of liquidity, these equal lows, also this potential head and shoulders, fake out, sell to buy, who knows what could happen, right? But continuations to the upside are expected. We'll just see what happens throughout the week with ACAD, but I wanted to show you ACAD first because NZDCAD is bearish. However, if ACAD is going to go long, if ECAD is going to go long, if all these CAD pairs, XXX CAD pairs are going to go long, NZDCAD will likely follow suit. So even though we are counter trend trading this long, because we're bearish, we did break the structure to the upside. We actually did accumulate, and that was our buying volume there. That was a great area of supply. And if you sold it there, I wouldn't have been mad, but I wouldn't have been happy. Why wouldn't I have been happy? Well, first of all, this is a head and shoulders fake out, so sell to buy. Traders look to sell it below the neckline or break and retest of the neckline, so probably shouldn't have sold it there. But anyways, even if you did, it wouldn't have been terrible, just because you're following the trend, right? And I always say trade with the trend. Keep trading with the trend until it breaks. And finally it broke. So now we can see that that's supply, failed to generate the lower low. That's demand. We have sell side liquidity, 1, 2, 3, 4, 5 touches. This is retail. This could be a potential head and shoulders, skewed head and shoulders fake out, sell to buy into that repricing demand level to go long. So definitely looking out for NZDCAD. It's looking across the board like we're going to be going long XXXCAD. All right, a couple more and then we're done. AUDNZD, really don't have much on it besides the obvious. We came into our level that we finally wanted after like months and months and months. Finally came back down into it. Remember from the higher time frame zone that we made our higher high from, we came back down, made that higher low, came into that last selling volume. Why is this the last selling volume? Well, first and foremost, it's very similar to AUDCAD. You know, we created a lot of liquidity. We faked out from that liquidity. We pulled back, retested the trend line. Retail tries to go short. Nope, goes long. And we actually sweep higher time frame. Well, I'm on the 4 hour, but we swept huge amounts of sell side liquidity to the left, which is what's indicated with this line here. So swept it, pulled back, mitigated, or not mitigated, came back up into the supply. So low, high, retested the structure, failed to generate the lower low, higher high. So that's demand. So that's exactly why we had that reaction after we made the higher high, because we broke the structure from this previous swing point. Had the overall retracement, mitigated that level, accumulated that last selling volume. We mitigated here, and then the counter trend here broke to the upside, high, low, and that was our last selling volume that failed to generate the lower low, higher high. So that's why we could have looked at 1.05. It's also a psychological level when looking at this level here. And of course, prior to coming into the level, we had type 2 manipulation, equal highs, equal lows, building liquidity prior to coming into the level. Buy to sell to buy, reprice, failed to generate the lower low, higher high. Oops, higher high. So that's that last selling volume. So of course, that would be our area of demand. So again, what do we do? I mean, this is just plain as day. We generate liquidity. Again, in here, generate liquidity. 1, 2, 3 touches, generate the liquidity prior to coming down into that last demand level. And what do we do just like we did before from the higher time frame? On the lower time frame now, we created the trend line 1, 2, 3. Retail was buying with the third touch of the trend line, swept them out. So it broke the trend line, it retested it, retail tries to short. So they were trying to buy, now they're trying to short, and now everyone's swept out of the market, and now the market can continue with the real move, and as we talked about, it's trickle, okay? So anyways, remember we talked about inside demand, inside supply, low, high, low, just busted right through it. So that's that inside area of demand. So if price has an overall pullback, it would be more of like a break of structure. So low, high, higher low, higher high, that shift, right? And that would be a good area to look to take long from a higher time frame perspective. From a lower time frame perspective, 1 hour time frame, let's look at the trend line here. I like to draw trend lines because I want to see where retail is going to lose. It's fun to see them lose just because they deserve to lose. 1, 2, 3, 4 touches of this trend line. The retail is involved. Right, they're buying with the touches. Oh, guess what? Broke. And also, if you can see, this is support. Reaction. Support and the trend line broke. Now what happens? They short it. Well, what does price do? Price goes long, takes or stops. Well, what if they're trying to sell it? Well, they're trying to sell it upon the break and retest, right? So let's just see. Let's just extend this over because this is a low, a high, a low. This is where the structure broke. We retested. We tried to go short with retail, or well, we didn't, but retail did. That's what they're saying. And then no, price went back to the upside, created the huge move, and now we're bullish. So what I'm looking for is price to come back down, sweep sell side, and then mitigate that demand and then go long to continue with the trend. After we faked out, retail shorted, pull back, they tried to short it again. Nope, to back up to the upside, flips to demand. Now we can go long. So that's what I'll be looking for to start the week. Of course, things could change, but it's just what I see now. 2 more. AUDJPY. So AUDJPY currently in shorts here just because that's just our last buying volume in the market because we're bearish overall. Low, high, low, overall pullback high, could make a lower low. If we start to actually break the structure, then we could start to shift. So I'm actually liking both buys and sells. So this is where I look to potentially hedge. So with AUDJPY, we can see here again, inside supply. Just busted right through it, right? That's why we had the mitigation. So this is really the start of the trend, but this is the end of the pullback, right, for that continuation. So we had that liquidity run from this channel. Retail buys the channel breakout. Nope, back to the downside, sells off, fake out. So where's that last buying volume? Well, counter trend, high, low, failed, lower, low, continuations. That is also a repricing there. That could be a level. That's also supply. That's another last buying volume. But anyways, came back up into that level here. Both of those levels actually. So this is really where we'd like to see distribution. And if we get, that failure to generate in the lower low, that could be a sign to look to sell it, right? But if it ends up breaking, or even if it does pull back into my zones, I think I'm going to hedge my shorts with my buys. I just think that across the board, like we said, Aussie dollar strong, New Zealand dollar strong, Swiss franc is pretty weak too. So I'd like to continue to buy AUDJPY. And to correlate that, in addition, if you go to NZDCHF, we haven't reached the higher time frame objective point. Remember what we talked about? Either this level here, but really these two levels. That's why I'm liking further continuations on AUDCHF, because NZDCHF still needs to push to the upside too. So that's why my buys aren't as probable. However, so could happen because I'm following the structure and I'm maintaining my rules, which is why I'm trading it. But if I lose, that's okay. But in this situation, I could potentially hedge. So now in here, let's look at where the structure shifted or is starting to pull back. Don't think of this as, oh, we broke and we made a higher high, so now we have to make a higher low and a higher high. No. Why? Because if this is a lower low and this is a lower high and that is a lower low, this is not a higher high. It is, but it's just an overall retracement because the higher time frame in this case will trump the lower time frame. So if we come into the higher time frame level, I don't care if we're bullish. If we make a high, see, what we could have done is two things. We could have done this, which we did, or we could have just went like that. What are you likely to take? Let me picture this out for you, because this is something that's probably going to help a lot of you. If you have a supply level here in the higher time frame, and you go like this, are you likely to buy this? Yes, because you see the structure, because you see it as high, low, high, low. What if you saw it like this? And the price came into it, just like it did here. Would you look, and the price had a reaction, would you look to buy it? No, because there's nothing to react from. But that's where the psychology screws you guys over, is because you're looking at it from how does it look? Not what it is. This is an overall pullback, regardless of the fact that it's still a higher high, higher low. This is still an overall pullback, regardless of the fact that it's just trickle, just one singular move. Whether it's one singular move, whether it's two singular moves, whether it's three singular moves, if it's a billion singular moves, I don't care. It's still an overall pullback. So that's why we still need to trade that short from that level. If it goes short, great. If it doesn't, well, in this case, because of my other confluences that I talked about before, we need to be looking to hedge because of NZDCHF, because of the strength and correlation of all other stuff. So anyways, we could have an overall pullback, right? High, low, high, right? If we get an overall pullback, that would be great. That would be the same size pullback as what we had here probably, right? So where would that be? Well, in here, liquidity run, sell side, sell to buy, higher high from that high, pulled back, failed to generate the lower low, imbalance was filled. Last selling volume before the structure was broken. Where's the counter trend? Low, high, low. So where's the last selling volume? Right there and right there. And at that point, it broke the structure. So those are our levels of demand. So that's the higher time frame perspective. And we also can see continuations potentially if price just continues with, this trend here. Just could see that. So high, low mitigation. High could have an overall pullback, low into this demand, or just into this imbalance, or maybe this lower time frame level right there, that repricing, or 6060, 6050 psychological level, just somewhere in here maybe. That could be an interesting level. So from a lower time frame standpoint, we could, obviously I'm in short, so that takes care of that. But for hedging longs, we could see the current lower time frame trend continue, or we could see the higher time frame trend continue. Either way, level, I should have had the risk reward tool there. I don't know why I didn't. There, and there. Okay. So hopefully you guys understand that. Again, I know I talk fast. That's just who I am. Last one, thank you guys for tuning in. If you guys have stayed for the whole time, I really appreciate it. I know you'd probably rather be doing anything else with your weekend, but I really do appreciate you watching this lengthy video. Anyways, same thing. We are bearish on the higher time frame, just like we are on AUDCHF. Same thing as EURCHF here. It's because we're bearish. You can clearly see we're bearish. We have unmitigated levels of supply, right? This is the end of the pullback. Whoops, what the heck? End of the pullback, lower low. So high, low, failed, lower low. So I don't want to go into the nitty gritty. These are unmitigated. That's probably not going to push up for a while, but we have equal highs. We have descending liquidity here. So looking to take that descending liquidity, equal highs, mitigate these levels at some point. And it's likely to probably do it soon because, well, we're starting to bottom out. We've made the lower low. So now we could see, right, the lower high for a lower low, maybe. So we finally made that lower low, and now we've really bottomed out. We've shifted back to the upside. So I'd like to see further continuations long. So with this lower time frame in here, you can see accumulation, especially the right in here, the low, high, failure to make the lower low below that level, and then the higher high. So high, low, and we see one drive, two drive, looking for that third drive. So anyways, you can see in here equal lows. Well, not really equal lows, but just trend line liquidity taken. 1, 2, 3 touches, sell to buy, reprice, right? It's really where we failed to generate the lower low, and that's where we made the higher high. So that selling volume will turn into demand. And now what are we forming? Liquidity, right? A channel. I would love to see something like a channel or equal highs or equal lows or something to show that there's going to be some sort of fake out most likely before the overall direction, and that's where my zone is. So either one of two things. Either a sell to buy or either a buy to sell to buy type 2 manipulation into that level, 9,720 psychological level to go long. All right. Anyways, guys, thank you so much for watching and listening. Really, I do appreciate your time. I hope you learned a lot. I really do. I love doing these for you guys. I love helping you the best I can. I know I talk fast. I know I'm very straightforward and blunt because that's how I teach. It's just who I am as a person as well. I feel like this helps the best, gets the point across, doesn't sugarcoat anything, and it gets it through. So again, as always, guys, if you have any questions, please feel free to let me know. And if you enjoyed this and like to book a call with me to talk a little bit more about how we can best help you along your trading journey so that you can be on top of the markets every single week, every single day, killing it, then feel free to book a call. I'd love to speak with you about how we can best help you. So guys, enjoy the rest of your weekend. Have a great week ahead and happy trading. Take care.